Absolutely. It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Tuesday evening, June 14th, 2016. Markets are looking a little choppy ahead of tomorrow's FOMC announcement, but I think we can find some tradable opportunities for Yellen and Co. Take the microphone middle of the afternoon tomorrow. Crude oil and euro are both bearish this evening, while the S&P and gold are looking pretty bullish going into Wednesday's trading session. Before we jump into our charts and take a look at a strategy for not only an inventory Wednesday, but a very, very highly anticipated FOMC announcement Wednesday, make sure to remember the only place to watch this full-length version of the nightly newsletter is here on our trading blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of the YouTube video that'll take you over here to our trading blog where you can watch the full-length version. While you're here, don't forget, in the upper left-hand corner, grab a free pass. Come out and join me this week, next week, whenever it's convenient with you. If you're not a member here at School of Trade and you'd like a free pass to attend our trade room, grab that free pass in the upper left-hand corner. Also, don't forget to join the mailing list. Every evening, Monday through Thursday evening around 7:30, between 7:30 and 8 o'clock Eastern Time, I send out my nightly newsletter. I'll send you an email every evening when that newsletter is ready to go. All I need is your name and your email address, and you'll join the newsletter mailing list. Make sure you check your inbox, though. I'm going to send you a verification email, so make sure you check your inbox on that. Also, don't forget, below the video tonight, you can download all the charts you see me using in tonight's video. Follow that link below tonight's video, and you can download those charts and have them ready for your own computer tomorrow. And of course, over on the right-hand side, I always get questions about what does it feel like to be a student here at School of Trade. You know, we have one of the longest running educational services on the planet. Check out the free trial on the right side of the blog. Follow that link that says trial membership and register as a member of that trial. You're going to learn more with me in 1 week on my trial than you will anywhere else on the web. I can guarantee you that. And don't forget, I'm always here to help you guys out step by step along the way. If you have any questions, use that live support button on the right-hand side of the website. Tons of important information to cover tonight on the charts. Before we jump into charts, though, let's take a look at the calendar. Now, we talked about this in last night's newsletter. This is what? This is the quadruple witching week. This is the third week of the sixth month of the year, right? The months of 3, 6, 9, and 12. March, June, September, and December, right? The third Friday of those quarterly months is called quadruple witching. Quad witching has a self-fulfilling prophecy. Traders know about it. They trade lower volume. A lot of traders go on vacation this week. In my world, this is a kind of a negotiable trader's holiday. We do a lot of reflection, and we talk with our students about how we can use this time, a little bit lower volume during this time of the year, these quadruple witching weeks. We teach them in our beginner's course, and we talk about how we use these weeks as a time of reflection, a time of self-improvement, and of course, a time to just, again, reflect back on our results, make sure we're ready for next week when the market comes back to normal again. We will start definitely seeing signs of quad witching Thursday and Friday. We're not quite there yet. What we do have to worry about, though, is that FOMC announcement tomorrow afternoon. As we said about last night's newsletter, the FOMC meeting began today. I have to be honest, today definitely felt more like FOMC day than it did the day before. You can feel this pent-up kind of calm before the storm, choppy markets. I don't want to say low volume because the S&P and crude both had some pretty good volume on the day today, but we had very narrow ranges on crude oil and a relatively wide range in the S&P, but you can definitely feel buyers were buying low, sellers were selling high. There wasn't really any expansion of those ranges for today. So today, if you felt it out there, today definitely felt like markets are anticipating tomorrow's FOMC announcement, and that FOMC announcement will be coming out tomorrow at 2 p.m. Eastern Time. Let's talk a little bit more about the announcement tomorrow real quickly here, and then we'll talk about what other news we have for tomorrow. Quad witching will not impact us until the end of the week, till Thursday, Friday. All right, so tomorrow, all eyes are on the Fed at 2 p.m. Eastern Time. Just like any time we have major news, This is major news, which means we're going to see a little bit of analysis paralysis, a little bit of sitting on hands. We do expect to see volume to be a little bit lighter tomorrow morning for good reason. A lot of the bigger fund managers in the S&P, a lot of the hedging corporations in crude oil, they will have no choice but to take their large positions and hit the sidelines. That's pretty much why we saw higher volume today. If you notice the higher volume today, but the real choppy price action, that's because a lot of the bigger players in the market, we assume, are getting out of the way, right? They're getting out of their positions, not necessarily taking new positions. They're getting out of their current positions ahead of tomorrow's FOMC. Really, the most important thing I can tell you about tomorrow is get in early and get out early. If you're in Europe, I'm jealous because that's where the best price action is going to be coming, probably up until about 10 a.m., 10:30 a.m. Eastern time tomorrow. If you're in Europe, you should have no problems tomorrow. We'll take a look at this on the calendar and see what we have for Europe for major news events. We got a little bit of news in the European session tomorrow. But if you're in the U.S. session with us tomorrow, though, it is going to be all about getting in early and getting out early tomorrow. After 10:30 a.m. tomorrow, I'll be very surprised if we're getting really anything coming into the markets. You could feel it today. You can definitely expect more of that tomorrow, so be aware of that. Early in, early out tomorrow, almost as if it's a Friday session, right? Early in, early out. It's also important that you understand that anything after that news comes out tomorrow at 2 p.m. Eastern time is all going to be gambling. Most professional traders are going to avoid trading around that news tomorrow, and they'll come back in and they'll do their work tomorrow. The day after, right? They'll come back and do their job on Thursday. Most big trading corporations will not be taking positions immediately after the news comes out. They'll wait for the dust to settle. They'll wait for all their analysts, right? All the bean counters will deliver their reports to their desks. Be waiting for them on Thursday morning when they come back in to execute the strategy going forward. Okay, there's only a few news events that have long-lasting impacts in the markets. FOMC is one of them tomorrow at 2 p.m. The other one happens every first Friday of the month, non-farm payrolls. We saw one at the beginning of the month of June as well. So we're expecting an early in, early out tomorrow ahead of the news, expecting there to be a whole lot of gambling on the 2 o'clock news event. I will recommend you stay the heck away from that. Remember, it's very difficult to get a good fill. Getting in and getting out, it becomes a very dangerous environment, and you have a very bright future as a professional trader. Don't go ruining it, right, by going bankrupt, going broke in your account because you tried to sell into a bull run, right, or tried to fade a move coming out of the FOMC meeting announcement. So be aware of that tomorrow, 2 o'clock FOMC. 2:30 is the press conference. If you want my opinion, get in early, get out early, make your money, few trades tomorrow morning, hit the sidelines. You're more than welcome to play around with FOMC, but you know my stand on that. Come in, get the more reliable trades on Thursday morning, and make your money there. All right, guys. Other than that, there's no major news tonight coming out of Asia. We do have, never mind, I take that back. We do have the Bank of Japan announcement coming out. Usually those announcements come out between midnight and 2 a.m., so we'll be listening in to hear what happens on that. We have the labor force report at 4:30, or labor market report at 4:30 a.m., merchandise trade at 5 a.m. Honestly, I don't think any of these reports are going to have much impact tomorrow. I would imagine everybody will be waiting for that FOMC announcement tomorrow afternoon. You may see a little bit of a blink and moving a needle with those news events tomorrow morning, but I don't expect much. I expect most people to be having all eyes and ears focused on that 2 o'clock announcement tomorrow afternoon. In the U.S. session, we have 8:30 PPI. 8:30, 9:15 industrial production, and of course we have that 10:30 a.m. inventory report. That basically means that for all the crude traders out there, pretty much anything after 10 o'clock is going to be dangerous for you guys on crude tomorrow. Everything else should be good until about 10:30. The S&P does like to kind of mimic crude right now, so be aware of that. But really, though, we got tomorrow morning in the U.S. session, 8:30 a.m. news, 9:15, and then 10:30 we have the petroleum status report. That is another really big news report for crude traders. If we didn't have FOMC tomorrow, I would be saying this is the most important news report for tomorrow, the inventory report there at 10:30 a.m. The inventory report is really a lot of the same when it comes to the FOMC announcement. Get at it early. Get out of the way before the news comes out. There's going to be a whole lot of gambling that happens around that 10:30 news event. I would expect it to be a little bit muted, a little bit lower volume tomorrow, just because all eyes and ears will be on the FOMC announcement, and the majority of professional crude traders will get in early tomorrow, get out early. Don't gamble away your money on the report itself, and then they'll come back on Thursday, back to the more reliable price action. So no matter which market you're trading tomorrow, we get some news in Europe, some news in Asia. I have a funny feeling, though, the markets will be relatively low volume, though, tomorrow. So be careful out there. Don't force it. I was talking to some of our students here today in the chat room and via email this afternoon. Right now is not the time to make any changes to any trading strategy. Stay the course. Don't add to your position. This is not the time to be going from simulation to live trading. Let this FOMC announcement get the heck behind us. Go into Thursday, and then we're moving forward into the rest of the week for quadruple witching, which we'll talk more about in tomorrow night's newsletter. A lot of news on the calendar for tomorrow. Get in early. Get out early. Crude traders, don't gamble on the inventory report. For the rest of us, don't gamble on the FOMC announcement. And then again, early in, early out tomorrow, and then back on Thursday for the most reliable opportunities. Thursday has potential to be a very, very big day because quad witching is on Friday, and whenever you have that small window of opportunity, you oftentimes see traders, they're not going to be able to trade the afternoon tomorrow, and they're not going to have much window on Friday. So Thursday setting up to be a very, very nice day here, as long as we don't go losing all of our chips in the market tomorrow afternoon. All right, guys, don't forget, we'll be opening up our trade room tomorrow morning with all of our students at 8 o'clock Eastern time. Speaking of trade rooms, speaking of markets, let's get on with this here, Joe. Thanks for your patience. I wanted to make sure we covered all the important topics for tomorrow. Crude oil going into inventories tomorrow. Don't forget, crude oil is early in, early out. Inventories are at 10:30 a.m. And we have the API report that came out and sent this price lower here tonight. The API resistance level is at 48.53 for tomorrow, which lines up conveniently at the high of that bear channel. Crude is definitely bearish and trading at the lows of a bear channel after this evening's API report sent prices tumbling back to the lows. The API report, by the way, comes out every Tuesday evening ahead of the inventory report the following day at 4:30 p.m. Eastern time. This market is clearly bearish, but trading at the lows is a big concern for the bears, who will be wise to wait for a two-legged correction before looking for the next leg down. Buyers will also be interested to buy these lows. It's difficult not to be interested to fade this move lower, but the strength of this last push down tells those bulls to wait for sellers to fail on the next pullback before they go committing to the buy side in the short term. This is one of those times when I say, well, we're obviously bearish, but I don't want to sell down here. So if I don't want to sell, do I buy? Ooh, it's tough to want to be a buyer. Look at the size of those red candles coming out of that news event, right? I would expect sellers are going to want to sell the next leg down. This is a difficult spot right now. I want to sell, but I don't want to sell low. So do I buy? Well, it's clearly a bear market. Do I want to buy this? Well, let's take a look at this. First of all, the first thing I think of is the channel. Now, this is a really good example of one of those really wide, almost flat channels. And let's talk about this for a second. When we have a channel that is really wide and really kind of flat, right, like this, both the buyers and sellers can both make money in this type of environment. Imagine now as price goes lower here, right? So price is going lower, it's rotating lower, and as it goes lower, buyers can buy by putting a limit order right below that low, right? So price comes down, it triggers in the buyers, they take a little bit of heat and then they make their money on the way back up, right? What do sellers do? Sellers, they sell the high, right? They can make their money on the way back down. And who's waiting here? The buyers again, right? The buyers can put a buy order to wait to buy the low, and they can buy, take a little bit of heat, right? But they can buy it and make money on the way back up. When you see a channel that looks like this, you know that there's going to be two-sided trading. Whenever there's two-sided trading, you've got to be a lot more conservative. Don't buy high, buy low. Don't sell, right? Don't sell low, sell high. I know we all know that, but I feel like for most new traders, we know what we should do, but we don't do it, right? So at least that's what I used to do. I used to tell myself every morning when I trade, remember, don't chase. And then